Hello, my name is Mike Hetman, and welcome to another edition of CMS Forex News. Today is Friday, February 15th, 2008. We'll start with last night in New Zealand, where retail sales slowed in December. On the month, sales increased 0.1% compared to a 2% climb the previous month. Excluding autos, sales met expectations of a 0.3% increase, which was also a slower pace compared to November. Around 11 p.m. Eastern Standard Time yesterday, the Bank of Japan held rates steady at 0.5%, which was expected by the market. The yen weakened for the next several hours, but reversed those losses during European trading. The dollar-yen, for example, met resistance at 108.30 overnight and proceeded to fall about 80 pips in the yen's favor during European trading. The pair was not able to match yesterday's high near 108.55. After opening the week lower in response to the weekend's G7 meeting, it rallied around 200 pips by Thursday morning. However, following Bernanke's testimony yesterday, the pair's uptrend stalled, and the pair was close to ending the week where it started. In the Eurozone, the trade balance showed a deficit of 2.1 billion euros. It's the first time in 5 months that imports were greater than exports, and the result surprised economists. For all of 2007, the Eurozone posted a 28.3 billion euro surplus, about 3 times larger than 2006. The euro-dollar pair fell slightly after the trade data, but looking at the week overall, it has climbed around 180 pips. Better investor confidence data from the Eurozone earlier in the week, with Bernanke's comments and poor data from the U.S. today, all pushed the pair up. Turning to the U.S., there were 2 pieces of bad news. The New York Empire Manufacturing Index tumbled nearly 21 points to negative 11.7, falling below zero for the first time since May 2005. The new orders, shipments, and employment indexes all fell into the red. A preliminary release showed that the University of Michigan's consumer sentiment plunged in February to 69.6. This is the lowest level in 16 years. Consumers are being weighed down by a weaker job market, higher prices for gasoline, and a multitude of negative headlines warning of recession. The greenback was down versus the yen and euro and continued its losses versus the Australian dollar. The Aussie dollar pair climbed this week after the central bank's quarterly report on Sunday said that inflation was uncomfortably high and the bank would have to continue tightening monetary policy. The pair was up 100 pips from its open. The dollar did strengthen against the pound, snapping 5 days of gains for the pound-dollar pair. According to Bloomberg, investors sold the pound as speculation increased that its recent rise did not reflect the outlook for interest rates or the economy. The pair was up 280 pips when it set a high above 1.97. By 12 a.m. New York time, it had eased around 100 pips and traded near 1.9610. Next week, some important releases include U.S. and Canadian CPI for January. There will also be monetary policy meeting minutes from Japan, the UK, and the U.S. We'll also get retail sales from the UK and Canada. And that's it for today. For CMS Forex, I'm Mike Hetman. Thank you for watching us, and join us again next week here at cmsfx.com.